Welcome back to Investing Talk. Today, we are going to be looking at net power, NPWR. You sent this in, and we thought it would be worth taking a look at.
Right. We got some stuff together, kind of a technical analysis, news analysis of like what the price has been doing, and then just kind of like an analysis of like the broader market trends, all from around March 10th, 2025.
So the goal here is just to kind of like really understand like what's been going on with the stock recently. Based on what these sources are saying, pull out like the key insights without, going too deep into the weeds.
Yeah, and I think the first thing that kind of jumps out to me, at least from all this material, is that there was a pretty significant drop in NPWR's price on March 10th.
Huge, 53.82%. Yeah. Decrease in a single day. Apparently, this was preceded by a volatility trading pause, according to Markets Insider. For those at home, that's basically they temporarily stop trading when the price of a stock is moving too quickly. Just to kind of like give the market a second to like digest what's happening. And so the fact that this happened before, this like huge drop, kind of suggests that there was some pretty significant news that was coming.
And it looks like it was directly connected to their 2025 Form 10-K being released. Reports say that this filing revealed a net loss of $164.6 million for 2024. And it also highlighted considerable risks associated with the company actually like bringing their technology to a commercial scale.
So if you see a big loss like that, and then you're also kind of like unsure about whether it's going to work out in the future, investors tend to react very strongly. To give you kind of like a sense of scale, one of the posts on X said that the stock was trading at $6.48 just a few days earlier on March 7th. So that's a huge change in just a couple of days. It kind of makes you wonder about like investor confidence after such a rapid decline.
It does. To give this recent action some historical context, the technical analysis report gives us a 52-week trading range for net power from a low of $6.57 back in September of 2024 to a high of $17.62 in September of 2023.
So even before this drop, it's had a lot of ups and downs. Looks like more recently the trend has been downwards. What can you tell us about that?
The data indicates just that. As of mid-December 2024, the stock was already down almost 20% over the past month and about 15% over the past year. This is according to TradingView. So this suggests that the recent drop wasn't entirely out of the blue. There was some downward momentum already in play.
Wasn't a smooth ride even before December. The technical analysis noted that in the week leading up to December 13th, the average daily volatility was over 6%. With one day seeing a range of over 5.5%. So it was already kind of trading with a fair amount of choppiness.
That kind of volatility is often a characteristic of companies in developing sectors like clean energy, particularly those that haven't yet generated revenue. Now, in terms of trading volume, the reports clearly show a significant increase in volume on March 10th, which makes sense, given the big price
Looks like that when you get like big news, you typically see a lot of trading. People are deciding what to do.
Exactly.
What about the support levels that analysts were watching?
Well, the technical analysis had identified accumulated volume support levels around $9 and $8.91 based on data from mid-December. However, the recent drop went well below the $6.57 low from September. So this is key because those prior support levels essentially failed to hold the price up.
So when the stock breaks through these established support levels, what does that typically imply?
It suggests that the stock might be headed towards testing its all-time low, or potentially establishing a new lower price range. It signals a notable shift in how investors view the stock and indicates increased selling pressure.
Let's talk about what the moving averages were indicating. Sounds like they were already kind of like giving off some cautionary signals.
That's right. As of mid-December, stockinvest.us had reported sell signals from both the short-term and the long-term moving averages. Think of a moving average as like a way to smooth out price fluctuations and see the underlying trend. So when both short and long-term averages are signaling a sell, it reinforces a bearish outlook.
And for anyone who might not be familiar with this stuff, what does it mean when the long-term average is above the short-term average?
That is generally considered a bearish sign. It suggests that the overall price trend over a longer period is still higher than the more recent price trend, indicating downward momentum is picking up.
The analysis also mentioned some resistance levels that had previously prevented the price from going higher. What can you tell us about that?
Yes, resistance had been identified around $10.62 and $10.94. These are price points where buying interest had previously weakened, preventing the stock from moving further upward. Additionally, there was a pivot top sell signal back in late November, which preceded a considerable decline in the stock price. So that earlier sell signal seems to have been a warning sign.
Almost 25% drop after that sell signal. That's a substantial move downwards.
It is. And the stock's inability to consistently trade above its 200-day moving average is another technical confirmation of this bearish momentum. The 200-day average is often seen as a key indicator of the longer-term trend, and staying below it suggests continued negative sentiment.
Now let's discuss the Relative Strength Index, or RSI. We don't have the exact number for March 10th, but the analysis gives us some clues based on the price action.
Given the magnitude of the price drop, it's highly likely that the RSI plummeted into what's considered oversold territory. Below a reading of 30, the RSI is a measure of how quickly a stock price is changing. And a very low reading often suggests that the selling might be overdone in the short term. This is particularly probable considering the stock was already in a downward trend for the month.
So what does an oversold RSI typically suggest to investors?
Often indicates that the selling pressure might be reaching a point of exhaustion, and we could potentially see a price bounce. However, it's really important to remember that in strong downward trends, a stock can remain in oversold territory for an extended period. So an oversold RSI isn't necessarily an immediate buy signal.
That's a very important point. The analysis also brought up an interesting hypothetical. Regarding the RSI before this big drop occurred.
Yes, if the RSI was in a more moderate range, say between 40 and 50, before the 10K release, the subsequent massive plunge would have very likely pushed it very deeply into oversold territory. In such a scenario, if investor sentiment were to shift for some reason, we might anticipate a more significant rebound.
But these technical indicators are only part of the picture, right? We also need to consider the underlying business and financial health of the company.
Absolutely. And the reports highlight some significant fundamental concerns. For NetPower, as a pre-revenue company, they haven't yet generated substantial income from their operations. This inherently involves execution risks as they work to commercialize their technology. Bringing a new technology to market at scale is a complex undertaking with many potential challenges.
The valuation of the company also seems to be a point of discussion.
According to Morningstar data from March 10th, the stock was trading at a very substantial premium to its estimated intrinsic value, over 750%.
So this high premium basically tells you that the market has already factored in a significant degree of future success for the company. So if there are any setbacks or delays in their plans, that high valuation could be at risk.
Yeah, that's a considerable premium indeed. The volatility and beta of the stock also paint an interesting picture for us. The high volatility, around 7.87%, isn't unexpected for a company in this early stage of development. However, the low beta at just 0.24 is quite noteworthy. Beta measures how much a stock's price tends to move in relation to the overall market. So low beta suggests that NetPower's price isn't strongly correlated with broader market movements.
So what does that combination practically mean for someone looking at the stock?
It implies that the stock's price swings are more likely to be driven by company-specific news and events, rather than general market trends. This also means that the risk is more concentrated on factors directly related to NetPower's progress. And any news, positive or negative about the company, could have a magnified impact on the stock price. It's a more individualistic risk profile.
Given all these bearish technical signals, it doesn't sound like the analysis was pointing to any kind of immediate positive catalyst.
That's correct. The absence of a clear bottom pivot, which would typically suggest that selling pressure is subsiding, and the fact that those key support levels have been broken, both suggest the potential for further downside. The analysis even raises the possibility of the stock moving down to $6 or even lower if strong buying interest doesn't emerge.
Now let's consider the broader market sentiment and the overall context surrounding NetPower. Seems like there were some differing opinions out there.
Indeed, a Seeking Alpha post from early March presented a rather optimistic view, characterizing it as a high-risk, high-reward situation, with the potential for substantial gains if their technology proves successful. However, following the release of the 10K, posts on X highlighted concerns about increasing costs and schedule delays, indicating a shift in how investors were viewing the company's near-term prospects.
So the initial enthusiasm seemed to have been tempered by the more concrete financial details.
Precisely. The decline in the stock price also needs to be understood within the context of a broader market that had become somewhat cautious about highly valued growth stocks, especially with a tech sell-off, being mentioned by Yahoo Finance around that same time.
So NetPower wasn't operating in a vacuum. And how does net power fit into the bigger picture of trends within the clean energy sector itself?
Well, while the clean energy sector as a whole is attracting significant attention, due to global decarbonization efforts, Net Power's status as a pre-revenue company puts it in contrast with a market that seems to be increasingly favoring companies with established earnings and more tangible value, as noted by Morningstar. So the market's appetite may be shifting away from pure speculation in this sector.
So for someone looking at net power from an investment perspective right now, what's the main takeaway?
The analysis consistently points to a high-risk, high-reward scenario, echoing the sentiment we saw in some of those posts on X. The potential for significant returns is there if their technology achieves successful commercialization, potentially leading to the multi-billion-dollar valuation some have discussed.
But that very high premium to its intrinsic value definitely sounds like a big element of risk to be aware of.
Absolutely it is. Given the current lack of earnings and that substantial premium, the risk of overvaluation is considerable. A prudent approach would likely involve waiting for more concrete developments, such as a potential correction in the stock price, or clearer progress on their financial and operational milestones, before seriously considering an investment.
But for those who are more risk tolerant and are interested in the long-term potential,
The strategy of taking a small long-term position as a speculative bet on their technology could be considered. However, it should definitely be balanced within a well-diversified investment portfolio. To help manage the inherent downside risk associated with such a speculative investment.
so to recap what we talked about today, about net power, seems like the recent sharp drop in the stock price was very likely triggered by the disclosure of significant net loss and concerns regarding the risks of bringing their technology to market, as outlined in their 2025 Form 10-K filing.
That's an accurate summary, and the technical indicators we examined largely support a bearish outlook, while fundamental concerns surrounding their pre-revenue status and that high valuation add another layer of caution for investors. The shift in market sentiment following the release of those financial details also played a critical role in the stock's performance.
This rapid and substantial price change, driven by fundamental news, really highlights the dynamic between
Yeah.
the exciting potential of innovative technologies, especially in a sector like clean energy, and the often challenging realities of actually bringing those innovations to widespread use.
And actually achieving profitability kind of makes you think about how investors are weighing these factors. It certainly raises important questions about how much future potential should be factored into a company's current valuation, particularly when significant milestones and financial results are still in the future.
If you found this overview helpful in understanding the recent activities surrounding net power, please consider subscribing, liking, and leaving a comment.